Thank you, Madam Chair. I want to thank Ranking Member McHenry for his leadership in calling for this hearing today, and also you, Madam Chair, for bringing us together. Mr. Tenev, I'm going to start my questions with you by walking through a series of events from that day in January, just to make sure we're all on the same page. So in your testimony, you mentioned that the automated deposit requirements from DTCC came in at 5:11 a.m. Eastern, and it showed a $3 billion deficit, correct?
I believe that's correct, yes.
Okay. At that point, 5:11 a.m., did you have the liquidity to meet the additional $3 billion deposit requirement?
So as we wrote in detail in my written testimony, there were a series of steps that the Robinhood Securities team took to
reclaim my time, sir. At that exact moment, did you have the liquidity for $3 billion? 5:11 a.m.
At that moment, we would not have been able to post the $3 billion in collateral.
Okay. So when you said, and you've said this multiple times, that you did in fact have the liquidity and you didn't have a liquidity problem, at that moment in time, that is not necessarily true, correct? You had to take steps to get there.
Congressman, we did have to, the Robinhood Securities team had to work with our relevant clearinghouses to adjust the risk profile of the trading day in order to meet our collateral requirements.
Right. And in order to do that, your choice was to throttle trading to prevent your clients from being able to purchase in certain shares, correct?
That's correct. Robinhood Securities had to restrict buying in about 13 securities. Okay.
And if you had not been able to de-risk the profile or the portfolio, excuse me, you wouldn't been able to raise the money, get the VAR requirement and the excess capital charge waived to de-risk the portfolio, then DTCC would have stepped in and liquidated the portfolio, correct?
I'm not sure what the exact, Congressman, what the exact steps that they would take if we weren't in compliance with the deposit requirements would be, but it would not have been a good situation for the firm or the customers.
So reclaim my time. So the letter that Ranking Member McHenry submitted for the record, I would draw everyone's attention to. I'll just read this. If a clearing member fails to satisfy a margin call, it exposes other clearing members to risk and can put NSCC out of compliance. In a case of non-payment, NSCC may cease to act for the clearing member and liquidate its unsettled clearing portfolio. So that was definitely in the cards. For my constituents who are Robinhood clients, what would this have done to their portfolio if it would have been forced liquidation as a result of missing the capital call?
Oh, well, Congressman, if there was forced liquidation, at the very least, it would have resulted in a total lack of access to the markets for your constituents, not just to the 13 securities that we restricted buying in.
Right. So this would have been an enormous catastrophe for Robinhood, correct? And the clients.
Correct. And not just Robinhood, but the over 13 million customers that we serve.
Yeah, and I think that's really sort of the crux of the issue. So in a sense, I love your company because it does, when correctly managed, provide investment opportunities for individuals who are currently frozen out of the markets for one reason or another. At the same time, though, I believe a vulnerability was clearly exposed in your business model and perhaps in the regime that governs your capital requirements. And we just can't live in a world where my constituents could have their shares liquidated without their consent because you all aren't able to make a capital call. I appreciate that you were able to ultimately satisfy it, but the amount of time you have from 5 a.m. to 10 a.m. to figure this out is scary for the company, and frankly, I care more about my constituents than anything, and scary for them. And so I hope we'll continue to look at that. Beyond that, though, I also hope that this hearing highlights a very real problem with our financial markets today and how they're accessed by everyday investors. Today, the Melvin and Citadels of the world, as well as major PE and VC funds, have access to the world's greatest investment opportunities on the planet, whereas the retail investor world, of which Mr. Gill is a great member, it doesn't, for lack of a better term, has access to an ever diminishing set of investment opportunities. And so while we're debating these vulnerabilities, we're also serious about finding ways to expand access for Main Street investors. And with that, I yield.
Shepard Smith here. Thanks for watching CNBC on YouTube.